Tom, give us just a 2-minute, 3-minute overview of what's your style of investing? How do obviously you've invested in a number of IT companies over the years. How do you generally approach it?
Sure. Well, I guess everybody can hear me. What we do primarily is seed investing, seed stage investing. So at a very, very early stage, definitely pre-revenue. Very often, what we do is actually start up a company and put the first money in, perhaps a little bit now, a little bit after we hit a certain stage. And that's the main emphasis. We've also done early stage investing. Primarily those are either follow-on investments to the successful seeds, or they're tag-along investments with other investors that we're familiar with. And that's basically it. Basically, all of our seed investments are either software companies or have a significant software component to them. That's part of the proprietary nature of the offering. The other early stage investments encompass a wide variety, with perhaps the IT side maybe almost half. And that's about it.
Okay, thanks.
Oh,
Just goes down a lot quickly. Our second panelist today is Doug George. He's from York. He has a degree from Penn State in agricultural business management. He is the president of Starview Media and has owned, handfuls of radio stations over the years.
A few.
A few handfuls, yes. He's been an angel investor in more than a dozen startups, approximately half of them co-investing with Ben Franklin Technology Partners. He's been involved with the Murata Business Center Business Incubator Program in Carlisle, serving previously as former chairman, and has been a member for a number of years. He's also very much very involved in this community as well. He's the chairman of the Spring Garden Township Planning Commission and New York Suburban Education Foundation Board. So I'm going to ask the same question of you, Doug. A couple of minutes on what's your style of investing?
Well, first I'd like to say I really like starting businesses, and I've started business. My background is in media and advertising, but over time I've started businesses in hospitality, manufacturing, and what became an extension, or not an extension, but just another point of diversification was to invest in be an angel investor in startups. And yeah, there we go. So I think when it comes to technology investments, whether it be biomedical or IT, I follow the leader. I tend to network with people, and I'm most interested to invest with people who have far more knowledge in a space than I do. I value the relationships the trust I put in the knowledge and instincts with other people, and I've never been a lead investor in any particular deal where I'm negotiating the valuation and things like that. But to me, it's about investing with the people that you trust and have faith in. So I think that's about it.
Okay, thanks. Our third panelist is Mike Shoemaker, who's the managing principal at Wellspring FV, a business incubator specializing in building technology companies, particularly software internet information technologies, and communication companies. He's also currently the CEO of Bindery Associates, which is a trade book bindery that Wellspring and another partner acquired a number of years ago. Prior to that, Mike specialized in manufacturing and technology management and investment capitalization over a 15-year period. And he is one of the founders and heads of the Lancaster Angel Network, which is a regularly meeting group of angel investors here in Lancaster. He's a founding board and executive committee member for the Pennsylvania Angel Network, and he serves on the board of the other hat that I wear, that of Ben Franklin Venture Investment. He has a Bachelor of Science degree in Electronics Engineering Technology from the Ohio Institute of Technology. So Mike, I'm going to ask you the same question I asked the other two. What's generally your style of investing?
There's two separate hats that I wear. There's the side that is Wellspring, which is our business, and then there's the Angel Network, where I'm screening companies for 20, 30 guys that are looking at stuff. I'll start with the Angel Network because that's easier to describe. I get about 30 business plans a month that I have to go through, and my goal is to get to a quick no. And I would say I go through a lot of these things, and they all are pitching largely the same thing, bet on me. Most of them aren't bettable, and so I have to weed out the bad ones to try and spend the time evaluating what I think might be the good ones. And it's largely about making sure that it's not a mad inventor, that the person that's presenting to us is credible, that they've got a decent idea and a decent market, and most importantly, it looks like there's a way to get back out. One of the tricks to angel investing is not getting in. Getting in is really easy. You write a check and you're in. The problem's getting back out. Whether it's a profit or not, it's just getting back out at all. From a Wellspring point of view, we mostly do startups and build our own companies. We've gotten involved with some other entrepreneurs, trying to guide them down the path. Sometimes it works, sometimes it doesn't. We evaluate them with exactly the same criteria. Do they have a credible product that's solving a real problem? Is there a market for it? Do I think anybody cares about that market? And then how many people do we think might be interested in buying this company 5, 7 years down the road? And if I can't answer that last one, the answer is always no.
Okay, thanks. So I'm going to throw out a question. What is the one thing that potential investee companies do that makes you crazy?
Can I go first?
He's chomping at the bit, I think. Go ahead, Tom.
Coming in with their own valuation right away, and even more so when they insist on valuation. Sometimes even it's kind of like, we'll talk to you if we're talking this number, and they won't talk to me. I won't talk to them. That's probably crazy.
Okay.
Mine is when a company or an entrepreneur comes in and says we have no competition. That almost always drives me insane, because it means one of two things. Either they don't know who the competition is, which is very dangerous, or there's absolutely no market, which is why there's no competition. Nobody cares. In either case, if they come in and say, I have no competition, I'm almost always going to red flag it and just walk away.
I'd say my thing that pushes my buttons the most are people, founders who do not listen. And it drives me crazy, whether it's listening about evaluation, about strategy. It's not to say we're telling you something because you absolutely have to follow it. It's about, can you at least hear this information and process it? And sometimes that can be very, very hard. And generally, if it's before I've written the check, as we talked about, almost a thing that deflects me from wanting to be involved with the person.
Okay, thanks. On the flip side of this, what is the most important criterion that you look for in potential investee companies?
Your turn.
Show you first. Sure, let's do that. The single most important thing I look at, particularly as a seed investor, is very dedicated involvement by either the person, because at seed stage, it can even be one person or the team, which is even better. But it's imperative to see really a lot of excitement, a lot of strong dedication, the kind of moxie that really will carry them through the hard times, because that's one thing you really have to tell them at that stage is, you know, you're going to see really bad times, you know, before you see the good times. And you may see them several times. So that kind of dedication and moxie is the first threshold for me.
I think all those things about the founders I would agree with. I guess for me, I want to see a product or service that's disruptive, scalable. I want to know what's proprietary, because we always love to own something that nobody else has, if it's legitimate, and you know, that can be legitimately patented. And to the point of disruptive, something that's compelling. And the human side, I'll ditto that with what Tom said.
Yeah, at the risk of saying I agree with both of them. The thing that I like the best is when I have an entrepreneur or a team that comes in and they recognize what their weaknesses are and they're willing to bring in other people to help round out the team. Because the thing I'd say we all look at the hardest is what's the management like. Because a good management team can take a fair product and make good news out of it. A great product can be destroyed by a lousy management team. And so I like to see an entrepreneur that says, you know, I'm really bad at accounting, we're gonna have to get somebody in here to keep the books because I just hate doing it. As opposed to saying, well, I'll just learn QuickBooks. And you're not gonna learn QuickBooks, not the right way. So.
Okay. What's the one thing that companies can do to help them be more attractive as investees to you?
I'd say have a very clear message about what problem you're solving and how you're going to do it, and what your plan to get back out again is. Those are the three things I'm going to listen to first, because most importantly, we have to get back out, or this whole game is not worth doing.
Yeah, for me, it's pretty much the things that Michael and Doug have said, actually. Most of all, you know, come with a very definable, targetable route to market, you know, a plan to commercialize, particularly again as a seed investor. You know, have a means to get there, have a route to get there, even if you might have hiccups along the way, understand what they are, and really demonstrate that you can be adaptable to those hiccups. You could change when the environment changes.
I think the name Angel came from Broadway, where you'd invest in a Broadway show. Of course, you get all the glamour of being around Broadway and actors and actresses. You know, it's that's all exciting. But there's none of that with angel investing in business. And I make angel investments to make money. And I think that I'm most impressed when people come in with a business idea with a clear, well, with at least a sense of a beginning, a middle, and an exit. Sometimes you run into founders that want to own their baby, have their baby forever, and that's a problem. That can be the kind of thing that can divert me away from making an investment.